Hi everybody, Tom Gile at the Gile Group, bringing you the latest Gile report. So we're going to talk about three things this week. We're going to talk about interest rates, we're going to talk about inventory, we're going to talk about prices, because they're all in the headlines. So let's jump into that and then hang out for the end of the video and get Tom's take on what's going on in the market. So before we talk about interest rates, let's talk about inflation, because that's a big driver right now in what's going on with the interest rates in the market. Last week, the March inflation numbers came out. We were at 8.5%, which is the highest inflation that the U.S. has seen since December of 1981. So imagine a lot of you that are watching this video maybe weren't even born in 1981. I was, but I was quite a bit younger than I am now. So taking a look at that, interest rates went up again last week. We ended the week at about 5%. That is the highest rate we've seen for interest rates since 2010. But I do want to point out, we did flirt with some high fours. We're at about 4.8, 4.9% interest in November of 2018. What is that doing to the market? Well, if we look at it, we're going to look at a couple of indicators. The first one here is pending sales. As you can see here by this graph, pending sales really have not slowed down, even as interest rates have climbed over the last about 6 to 8 weeks or so. We're up about 3.6% over last year at the same time. But here's another metric that I look at, but I don't talk about it a lot, and I think it's a good one for us to really start watching, and that's lockbox opens. Because lockbox opens are going to be a true indicator of buyer activity. How many people are out looking at houses, opening doors, and viewing homes. So if we look at where we're at right now, last week we had a little over 21,000 lockbox opens throughout the metro area. If we compare that back to last year at the same time, we had just shy of 24,000. So we're actually down about 10% in lockbox opens. It's going to be interesting to watch this metric over the next couple of weeks. If you look at last year's numbers, you can see we top out in lockbox opens typically in late April, the beginning of May. So we're getting to that point in the marketplace now. So it'll be interesting to see, are we going to continue to hang below, or are we going to see a jump in lockbox opens over the next couple of weeks? I can't really pinpoint down right now why we're down a little bit. It may be just because there aren't as many homes to look at, or it may be the higher interest rates are starting to slow things down a little bit. So like I said, we're going to keep an eye on this one. Taking a look at the sales price here, I'm going to look at two different graphs. This first one is looking at it just month over month over the last several years since 2017. And you can see that, we've been going pretty much nowhere but up here. The average sales price at the end of March was $610,900 here in the metro area. But when we break this thing down, let's take a look at this trend where we've been at since the beginning of 2021. And you can see at the beginning of 2021, we had a pretty steep ramp up in price, and that leveled off about May of 2021. And we're pretty flat to even dip down a little bit, but then that price started to take off again as we got to the beginning of 2022. And you can see last week, the median sales price in the metro area was $620,000. That's the highest we've ever seen it. And what's kind of driving this price? It's inventory. You can see we're not getting any relief in inventory right now. We're still at 0.7 months of inventory in the metro area, which is an incredibly low number. We're also seeing some areas such as Beaverton, Tualatin, Tigard that are even lower. They're at 0.3, 0.4 months worth of inventory. So metro area as a whole, we're at about 3 weeks worth of inventory, but as we get into some of those smaller submarkets, we may only have about a week or two's worth of inventory on the market. So what's my take? Well, first of all, I think prices have been increasing here, especially since the beginning of the year, at a rather unsustainable level. And I don't think anyone's going to argue with me that we can't hold on to that rate of climb in prices. So I expect prices to level off like what we saw there on that graph, what we saw in 2021 as we head into summer. I think those prices are going to level off a little bit. I don't expect the housing bubble to burst, as some people are talking about, mainly because I don't think there's a housing bubble. And I don't think that because we have low inventory. We still have continued strong demand from buyers. As people are moving in and out of the area needing to buy homes. One thing we are seeing in this market, though, some buyers are being priced out of the market, especially they're at the fringes, either in terms of price or in terms of their credit score, where the bump in interest rates have really made it non-competitive for them, or not attractive for them to buy a home. I think the other thing we're going to see this year, I think we're going to see a couple more bumps in interest rates as we get towards the end of the year. So we're at currently about 5%. We may finish the year about 5.25%, 5.5%. We'll see where that's at. Sometimes interest rates are going to go up and down, and we talked about that a couple of weeks ago in our blog with Shane Musselwhite, our lender. They react to different changes in the market. So we're probably going to see some dips and like this, but I think overall we're going to see some continued climbs in interest rates. So keep that in mind. Waiting is going to do nothing but make things more expensive for you. So have questions about your home, about the real estate market in general, reach out to us on social media, give us a call, or send us an email at askgilegroup@gilegroup.com. We'd love to hear from you.